Welcome to an AFA webinar series, providing you with timely information and training each month on topics of interest. This is Brendan Burnett, Director, Professional Development and Education Programs. This month we are presenting Year-End Client Strategies. With me today is NAFA member and MDRT Top of the Table Advisor, Keith Gillies. During today's webinar, Keith will share his insights based on proven experience on how you can leverage year-end planning strategies to help your clients minimize taxes, review and revise their existing financial plans, and prepare for the coming year. By doing so, you can solidify your client relationships and improve your fourth quarter or first quarter results. During the presentation and question and answer session, you may type questions in the question box on the right side of your screen. Questions will be answered during the question and answer session at the end of the program. So let's begin. Keith, I'll turn the discussion to you.
Thank you, Brendan, and welcome to everyone. Good afternoon or good morning, depending on where you are at the moment. We appreciate it, your attending this webinar, and hopefully you will have some good information that you can use the rest of this year, the remainder of this year, and in the years to come. This is the typical disclosure information, basically telling you everything that we can't do, and with that we will move on. So what is the purpose of year-end planning? We use it, annual review planning, to help our clients minimize taxes, review their existing plans, and prepare for the next year. We also feel like as though this solidifies our relationships with particularly with our top clients. Since we're already so late in the year, you may not have the opportunity to do a lot of year-end planning for all of your clients for 2013, but we feel that this is a good way to jumpstart your 2014, because quite frankly, annual review planning can be done at any time, not necessarily just at the end of the year. So how do we come about doing this? Many of you may recall in 2005, Hurricane Katrina devastated the Gulf Coast region. For someone whose practice depended upon clients all along the Gulf Coast from New Orleans to Houston, it was a pretty tough time. And we had to make some decisions then about what we were going to do. And it reminded me of this quote by Thomas Carlyle, who said, "The block of granite, which is an obstacle in the pathway of the weak, becomes a stepping stone in the pathway of the strong." You know, at business school, they teach us that we have to think outside of the box. But what I've found is that often the answers are inside of the box. And with this year-end planning presentation, we have just that. Because back in 2005, we did not have an opportunity to see a lot of people because so many people had left the region and the city. During that time, I started to read a lot of articles about doing annual review planning. And we decided to put together a presentation for our clients as they return to help them reacclimate themselves with South Louisiana and onwards into Lafayette and Houston and other cities. What we found was that the plan worked so well, this annual review planning, we had tremendous amount of success with it, with our A-list clients. So let me share a little bit of that with you, what we had back in 2005. Because of all the damage and so on that was going on in the greater New Orleans area at the time, we didn't send out our annual review letter until October 31st, Halloween of 2005. In the next 2 months, this absolutely amazed me and my team here. We had 123 meetings. We received 15 unsolicited referrals, 12 of whom became clients. We had over 44 transactions for $122,000 of first-year commissions. Now, this plan works so well that in most cases we would never do it again. But we decided to actually make this part of our annual planning, and we're in the process of doing that now. And in our case, we have had the first interviews with most of our A-list clients. We're having secondary interviews now where necessary and following up with them. So I do not have a breakdown on the numbers of what we've actually transacted this year, but I can tell you that in last year, in 2012, we sent out our letter on September 15th. We had 54 meetings, 3 unsolicited referrals, 50 transactions for over $75,000 of first-year commissions. This is business with our existing clients. This is not with new clients. And what we learned was that we thought with our A-list clients that we had all of their business. We're finding out that we do not have all of their business. And as we do these annual reviews, we're able to do more and more things with our clients. Part of the new business is just bonuses or dividends that they might receive in the last quarter. Other parts are they may have changed jobs, so we're doing rollovers and many other ways that clients are giving us an opportunity to serve them. So what you see here, and what I think is important here, is this is from last year through October. It's just a sampling of the kinds of business that we've done. Not all of this are really big cases. A lot of these are smaller cases, as you can see here by the average roundtable commissions. So that gives you an idea of some of the things that we've been able to do. So how do we do this? We think that you should send out a letter 2 weeks prior to whatever your campaign start date is. So if you're going to do annual reviews at the end of the year, we think you should send out those letters by October 1st. We've been sending them out in mid-September, starting meetings in October 1st. Remember that my first letter didn't go out until October 31st. So I don't know if you have time to send out letters this year with a 2-week window, because you'll run right into the Christmas season. But I think that it's still an opportunity for you to reach out this year with maybe your top 10 or 12 clients and try to do this by year's end and see if you have any success. Then if you decide to use an annual review process either at year's end next year or in the first quarter, it's an opportunity for you to use these tools to go out there and do that. Now, what should you be thinking about when you're doing an annual review plan? Well, it's about what's in it for the client. What interests the clients? What's on the client's mind? We have developed some checklists to prompt the client to answer questions about what's going on in their mind. We do have the year-end appointment. We send out an organizer with the letter. The organizer is basically a concern sheet and another part of that. It's all on one sheet, but it's a set of concerns that they rank from 1 to 9. You may be familiar with this. I actually modeled the concern sheet out of what's in Financial Profiles. And we have the other part of the organizer, just documents to bring to our meetings. We have staff here that set up all of those appointments, and I think it's important for you to know how to review particularly tax documents in order to do successful annual review planning. So what you see here are samples of the documents that we send out, and you see the first page of the checklist from 2007. The dates aren't important. We do modify the checklist every year for what's important, what's going on in a particular year. But this gives you an idea of what they look like. So how do you conduct these meetings? Well, first thing you want to do, the meetings last about 30 minutes. Review the checklist and notes from prior meetings that you've had with the clients. Take the time to review the client documents. Retain and copy the documents for follow-up if necessary. Schedule a follow-up if necessary. And we always do this, is we send emails summarizing our meeting. What I've used for the past couple of years is something called the Black Book. It's a nice leather notebook. And after every client meeting, during every client meeting and after every client meeting, I make notes in that notebook, and let the client see me making the notes, and then I follow up with emails to the client summarizing those meetings. What's nice about the Black Book is that when we have follow-up meetings, I can actually go back to the date of a prior meeting and refresh them as to what we discussed. So what do you do at a follow-up? Review the checklist of notes, review the documents, do the emails, prepare any proposals that you need to make for the client. Let them know that you're putting proposals together. And keep in mind that the last day of business this year is Tuesday, December 31st. So if you're trying to make move up the ladder to quarter of the table or top of the table or even MDRT, or for your club qualifications, 12/31 Tuesday is the last day of business for this year. So what about document analysis? What should you be looking for here? Now, in the time that we have in this meeting, I can't teach you to be an expert at reviewing documents. So this will be a very quick overview of documents, what you should look for. And I would ask that you just take some time to learn about these things that are on these documents and prepare yourself for a review. Or maybe team up with someone who is really good at this kind of stuff and can help you with your cases in reviewing documents. Maybe that's a CPA or someone else, another colleague in your office. So we're going to look at payroll forms, tax return forms, client statements and documents when they bring those in. We want to see their statements. If they have any assets outside of our control, they have 401k plans and those types of things, have them bring those documents in so we can review those. We're going to get started with the payroll tax form, the W-2 form. I find that a lot of people overlook this document, but there's a lot of really good information on here. First of all, in box 1, you'll have wages, tips, and other compensation. And in box 3, you want to see if there's a big difference between those two boxes. You may be dealing with a state employee, for example, a teacher, and in their case, they may not pay Social Security at all. And so that will prompt you to know that they have a state retirement plan out there somewhere. And you can ask them, what are they doing with the money that they're not spending on Social Security? Is that an opportunity to take 6.2% of their income and put it away somewhere to help save to supplement their retirement? Medicare wages, this is going to be important going forward with some new taxes that have come online in 2013. We'll talk a little bit more about that in a second. But you will see that the Medicare wages and tips, this is basically unlimited based upon their wages and other compensation in box 1, whereas Social Security, there is a maximum amount that is taxed each year. We move on to some other parts of this document, and I'll skip to the next screen. We want to look and see if there's a difference, or whether or not if they have a retirement plan. So that will be in the box. It will list there if they have a retirement plan. So how is that important? Well, if they have a retirement plan, if they have a 401k plan, it is an opportunity to look at that plan, and maybe you can get a referral up to the decision maker in that company and have an opportunity to review the entire plan. We had one just this year where it was a pharmacy, and the pharmacy was contributing only to a profit sharing plan. So we had an opportunity to meet with the owner. We're hoping that something comes of this, to explain to the owner that for what they're contributing in profit sharing contributions, they could probably do a safe harbor 401k plan, which will allow people to make their own deferrals into the plan. So that came by just looking at their retirement plan, seeing that they had a retirement plan, but no elective deferrals. These other boxes are important as well. Box 12C will tell us if there's any taxable group insurance. If there is, maybe we can look at some type of group carve-out plan. 12AA will let us know if they're making Roth contributions to their 401k plan. And new for this year, 12DD, is the Obamacare Affordable Care Act premiums that are paid for their health insurance. This will go to determine whether or not someone will have Cadillac plans, which will incur an additional tax. It also tells you how much is being contributed for that individual's health insurance plan, and those of you in employee benefits, that might be of benefit for you to know. So we're going to skip to the next document, and that is Schedule A. Schedule A will tell us if somebody is itemizing or taking a standard deduction. In Louisiana, we have a Louisiana income tax, so a lot of people in Louisiana do itemize to get their Louisiana taxes paid to be contributed to be listed on their itemized deduction sheet. So what can we do to help our clients increase their itemized deductions before the end of the year? Well, they could prepay some mortgage payments, which will then prepay some interest, and that would then show up on their document that they receive from their mortgage company sometime in January or February. They can make sure that they pay all their state taxes by the end of the year so that those are deductible. What you can't prepay is other interest, insurance, and other things that will be itemized deductions. Investment advice deductions are 2%, limited as a miscellaneous deduction, and only for taxable accounts. So if you're charging clients fees and IRAs, they cannot be deductible on this document as a Schedule A deduction. What are some other things that we want to look for here in Schedule A? Is the client making substantial charitable contributions? If they are, we find this is an opportunity to ask the question about who will make those contributions in the event of the client's death. As you know, a good way for a client to contribute to a charity is through life insurance. Those life insurance premiums, if the policy is set up correctly, are tax deductible. If it's a cash value policy, the charity has control of the cash value as the owner and beneficiary of the policy. So they still have access to the cash, and upon a client's death, there can be a flowering of a nice size amount of planned giving to that particular charity. So you ask the client if they have, you see if they have charitable intent. If they're giving 5 to 10% or more of their income to charities, it's a great opportunity to talk to them about some of these other things that they can do, including donor-advised funds, foundations, and charitable remainder trust, in addition to the life insurance. You can also talk to them about what types of property they can give to charities above and beyond just cash, and that may be appreciated securities or appreciated properties. And there's an opportunity for you to then talk to the client about wealth replacement trust. So lots of information on Schedule A that can help you with your business. Schedule B is basically illustrates to us what the client is receiving in ordinary dividends and interest. If they have CDs today, we know what kind of interest that they're receiving there. It's virtually non-existent. It's an opportunity to talk to clients who have money invested in CDs about alternatives, which may be deferred annuities or other types of investments that may increase their yield and give them some tax-favored benefits. It's an opportunity to talk to clients about real returns. If they have money in a CD, let's say $100,000 at 1%, with inflation and taxes, they're taking big step backwards every year. The other thing that you want to talk to clients about is the awareness of year-end dividends. We have, if we remember back to 2008, I can tell you there were a lot of upset clients who received year-end dividends that created taxable events in brokerage accounts that may have lost 20, 30, or more % of their value during the year. So make sure the clients understand that there are year-end dividends from mutual funds. We can usually find out what those are prior to year's end and maybe take some steps to help them offset that. Schedule B, also here's some other points. What type of assets do they have there? If these assets are really long-term assets, can we convert those assets from short-term assets to long-term assets and maybe get the client better tax treatment and a little bit better return? Could we have income on there that's causing a client to have his or her Social Security tax? And if so, what can we do to help with that? Do we have a lot of dividends from stocks and mutual funds? And what can we do to help offset that? We can maybe use annuities to remove some of these amounts as income subject to taxes and reduce the income from Social Security purposes. It's a good opportunity to ask the clients, what is the purpose of these accounts? Why are they keeping so much in cash? And what type of assets and value of the assets are involved? All of that, we can prompt questions just from Schedule B. Schedule C is we think, a very interesting form. When we see a client that has substantial income on Schedule C, we want to talk to them about converting their business from a sole proprietorship to something else, whether that be an LLC taxed as an S Corp or taxed as a C Corp. We then have the opportunity to move money that has unlimited payroll exposure, payroll tax exposure, to something that may be less than full exposure to payroll taxes. But if they do have a Schedule C for this year, what can they do to help offset some of that income? Well, certainly it's an opportunity to, this year in particular, to go out there and buy some equipment. You get to write all of that off 100%. You may want to take the opportunity to buy a new vehicle. There are some special rules for vehicles that I believe expire in 2013. So particularly if you buy vehicles that have gross weights above 6,000 pounds, you can get some really nice tax deductions for that, even though you're not paying for the vehicle or computers or furniture or other equipment in full in 2013. These people who have Schedule Cs are great prospects for estate and business planning to look at key person life insurance and disability, particularly if you can show them how you convert Schedule C income to other types of income and you save payroll taxes. You can use those savings to help fund life insurance and disability income insurance. They're good prospects for certain types of critical illness insurance, long-term care, employee benefit plans, retirement plans, simple plans, and SEPs, estate planning, and so on. You want to study the business owner's expenses, help them understand if there are more expenses out there that they can help offset their Schedule C income. What about Schedule D? Well, Schedule D looks at capital gains and losses for the year. So what are we looking at here? We want to see if there have been a lot of trades taking place in the client's account. Do they have mostly mutual funds or individual stocks? Are they a good prospect for some deferral, maybe through a variable annuity, and maybe a variable annuity with some guaranteed living benefits? It's a good time to ask the client, when was the last time they rebalanced their portfolio? When was the last time someone evaluated their entire portfolio? Is there an opportunity there for you to do that and offer that service to the client? Is there anyone who oversees the client's portfolio? And when you get the answers to that question, I think you're going to be surprised. Because what happens is a lot of clients think they can do it on their own. They either get bored with it or they get too busy doing other things, and it's an opportunity for us to step in and for a fee to help them manage their portfolios so that not that they can't do it, it's just they just don't have the time to do it. We also want to see if there's lots and lots of trades going on. Do we see any churning of that account? Is that something that we want to look at and maybe help identify for the client? So lots of information on Schedule D. Some other things to talk about when we're talking about portfolio review and fine-tuning of the portfolio is harvesting losses. Right now we're getting from our clients, our top clients, if they have any loss carry forwards. It's been a good year for the stock market. We want to identify if they have loss carry forwards. We might be able to harvest some gains this year, and with those gains we can offset those with losses that are already on the client's tax return. It's maybe a good opportunity now to look at, before the year's end, to look at selling off any bonds some of those bonds have declined in value. There might be some losses that you can then offset and take out some capital gains offsetting those bond losses. It's an opportunity now to clean up their portfolio, to help them clean it up, and to look at stock swaps if they still want to be as heavily invested as they are in equities. We can look at stock swaps. So those are just some more things that you can look at and talk to clients about Schedule D. And when we're looking at a portfolio rebalancing, there's two really lenses there. Applying asset allocation theory to make sure the clients rebalance properly. And as we already mentioned, some loss harvesting. It's also a good idea to talk to clients about their time horizons and their risk tolerances. It's a good idea maybe every couple of years to have them redo a risk tolerance questionnaire to help identify if their risk tolerance levels have changed. And it's a good opportunity to offer, if you have such software, to offer them Monte Carlo simulations for their retirement income plan or just with their portfolios as a whole. Lots of information on Schedule D, lots of opportunities to talk to clients about that. What about Schedule E? Schedule E lists pretty much real estate property, other rental incomes that they may have. It's an opportunity for you to ask, is there a mortgage on the property? Is this part of a partnership? Should this property be in an LLC to give them some protection from lawsuits? So we also have the ability to identify the opportunity of cash flow here that we might be able to use for some other needs of the clients, needs and goals. So what about Schedule E? If they're in a partnership, do they have a buy-sell on that property? Do we need one? Do we need to get some life insurance? What if they have royalty income? Is this discretionary income that can be used for other planning purposes? If they have royalty income, that would be from like natural gas or oil wells and those types of things. Are they getting the proper credits and deductions on their tax return for that? And it's an opportunity for you to stand out just by knowing and asking these questions of the clients and reviewing their returns. Then we have the alternative minimum tax. We find that it's affecting more and more taxpayers as time goes on. It is a pretty bad tax, but it's also important for us to review. And this is an old document, but the document form is still 6251. You can go on that, see if that document is inside your client's tax package. Maybe you can help them with the alternative minimum tax by restructuring some of their investments or income. What are some other income tax considerations? Well, we have an increase in the dividend tax that we have to look at, and so those things we're looking at now, where the qualified dividends have gone up, particularly with clients that have incomes above $250,000. Capital gains tax is at 20%. We'll come back and talk about the Obamacare tax in just a second. We have the creeping of the alternative minimum tax, the Medicare Part A tax increase that's coming about for clients who have incomes above $250,000. We have the new unearned income tax of 3.8% for clients who have incomes $250,000 and above. The new Cadillac health plan tax when people have joint incomes above $250,000, and many other indirect taxes on health plans, drug makers, and so on. Also, I don't have it in here, but the fiscal cliff tax for clients who have incomes above $450,000, we're looking at an additional surtax of 3.6%, along with the phase out of itemized deductions. So some pretty serious tax implications for clients, particularly high-income clients, this year that have come online for clients. What are some miscellaneous items we have in here for clients to make their 529 contributions? If they have, maybe it's a grandparents for grandchildren, or clients who want to contribute to the plan for their own children. Remember that Steve Lineberg calls this the little giant. the annual gift tax exclusion amount of $14,000. They can do that now and again in January of 2014. So that's a lot of money that you can take out of a client's estate in just these small amounts with the annual review planning and the annual gift tax exclusion. So some other things that you can talk to clients about. We also have an opportunity to look at the client's medical expenses. It's a good time to look at their health care expenses. Maybe they should look at a health savings account if that's available. I personally like health savings accounts, but all of you, many of you may have your own ideas, but it's certainly something we can talk to clients about. What about a credit review? We advise our clients every year to at least go to annualcreditreport.com, where they can get a free credit report once a year. They can. It's also a good opportunity to talk to clients about things like LifeLock and other services that help protect you for identity theft. We can look at the client's credit score if they need to keep up with that, and any steps they need to take to improve it. We did an annual review with a client. We had them go to their, they found in their review, they found that there was a doctor bill of about less than $50 that was sent to the client's former address. So for this $50 bill, the client eventually was placed into the credit bureau with a collection agency, and it really hurt their credit score. So by going and identifying what had happened, they were able to correct it, pay the $50 charge, and with the help of the collection bureau and going back to the credit reporting bureaus, they were able to get that removed from their credit report, and their credit score soared after that. So there are some benefits that come out of this. If they do have a poor credit score, it's an opportunity for you to help talk to them about improving their credit score. What about qualified plans? Certainly want to make sure the clients are maximizing those by year's end. We've just had some meetings this week with some of our best clients. We went back and looked at their contributions for this year, and they have safe harbor plans, so they'll be taking bonuses in December so that they can maximize their plans for 2013. So it's a good opportunity for you to talk to your clients about that. Also, required minimum distributions. We make it a point now to do this. Last year, we had a client that had a required minimum distribution. It wasn't completed, so we spent more time afterwards trying to fix that than we did if we would have just gone ahead and made sure that all of our clients are taking their required minimum distributions. We have a plan to do that now. Every year we started this year. We reach out to each one of our clients so that if they fail to do it, at least we've done all that we can do to make sure that they're making their required minimum distributions. And it's an opportunity to find out if they have other qualified plans in other places, because you can ask to send me all of your qualified plans, and we'll calculate the required minimum distribution on all of these and make a recommendation as to where you need to take the money to validate your required minimum distribution. Anytime that you can help a client, you can also gather information that may help you with your practice. There's some other things that you can do there. If they have multiple IRAs, should we consolidate those? It's a good time to check to make sure that beneficiary designations are all done properly for stretch qualification and for Roth conversions as well. We talked about milestone birthdays, 70.5. Also 59.5. If a client reaches 59.5 in 2013 or 2014, many retirement plans allow for in-service distributions. It's an opportunity to go back to that client and say, look, you have a 401k plan investment options are relatively poor, hey, we can take that and make an in-service distribution to an IRA and open up many, many opportunities for you for investments. It's an opportunity to help clients and talk to them about Social Security. Social Security is a benefit that is maybe simple, but it can be complicated. I think that you should spend some time learning a little bit about Social Security so that you can help clients maximize their benefits. You know, do they want to take an early benefit? Do they want to take a spousal benefit? So there's some different things that they can do that you can help them calculate and advise as to what's the best thing to do. Also, retirement plan contributions. You know, make sure we know what the filing dates are for different things. We want to make sure that they have their IRAs in, $5,000 plus $1,000 catch-up if you're 50 or over. It's a good opportunity, again, to review strategies, goals, and objectives. It's an opportunity to talk to their clients about their spending patterns. We don't like to say clients need to be on budgets, but they should have a spending plan. If they're retired, are we monitoring their withdrawal rates? Do we feel comfortable with those rates so that the client can have a long and successful retirement? And what about inflation? The government talks like there's no inflation, and that's because energy and food is excluded from the CPI, but those things are going up, and of course, we all know there's lots of inflation in healthcare. What about 2014 planning? If you have clients who have children who are in college or going to college, make sure they get their government documents done early. It's very important. A lot of these schools need that FAFSA form in order to qualify college students for financial aid and scholarships. And it's good to get it in earlier the better, to be on the top of the stack. And what about any family dynamics? Anything going on with the family? Are there any weddings? If there are, it's an opportunity for you to maybe talk to your clients about working with their children or grandchildren. Are there any babies coming? If there are, is there a need for additional life insurance or disability insurance? And unfortunately, what if there are any divorces? Can we help the clients work through and manage through divorces? And we can all do that as financial advisors. Finally, we ask you to visualize April 15th. What's in store for that client? Are they going to have to pay higher taxes? Are they going to have any underpayment issues? Are they confronted with the alternative minimum tax? Can we help them lower income by doing some planning and shifting around with deductions, tax credits, and plan contributions? Are we sure that we reviewed their risk tolerances? That hasn't changed. Have we reviewed their performance on their portfolios? And what about any 2014 strategies and beyond? Every year we do something that says keep in mind something. This year I have two. Retirement income planning, which is becoming a bigger and bigger part of our practice, and probably for many of you out there, to talk to clients about retirement income planning and how the Affordable Care Act or Obamacare is affecting them. From business owners with higher premiums, changing plans for clients who are faced with higher premiums and higher deductibles, we can be a source for them, a source of comfort to help them and guide them through those things. In conclusion, tax education is important. Taking losses now will reward you April 15th. Do not wait for the good or bad news to arrive between January 1st and April 15th. Take care of things now, and it might be the best investment that you've made for you and your clients this year. Annual planning, I think, will assist you with your client relationships and also may keep you out of compliance issues. For all of our clients for whom we manage their assets and are charging a fee, we do an annual review. We have an annual review document the client signs off on. Just has a few very simple questions. Do we need to make any changes? Has anything changed in your life? If we do, we make notes on that, file it, and send a copy back to the client. So annual review planning, you keep these notes from year to year. It shows compliance folks that you're out there visiting with your clients and doing the right things for the fees or commissions that you are earning. So with that, Brendan, I'm going to pause. I know we went through that rather quickly, but I wanted to save some time to see if any of our colleagues out there had any softball questions for me.
Thank you, Keith. We do already have several questions, and I do ask that anyone on the call today, if you could please mute your phone or your microphone. Thank you very much, so we can avoid an echo. Thank you. The first question, aren't we going beyond our scope of a financial advisor by advising them based on their tax return? Could we have a liability issue?
Good question. I don't think so. I think it could be the opposite. I'm a certified financial planner. I'm an MBA. I feel like I'm qualified to review tax returns. I'm not doing their tax returns. And a lot of what we do when we send back the emails to the clients, we let them know that they need to share that with their tax advisors and other advisors. And quite frankly, Brendan, I want the opportunity to meet those other advisors and share my ideas with them. We live in a very litigious society. Fortunately, knock on wood, that I've been able to, in my practice, to avoid any major pitfalls. But I think that non-action sometimes can get us into as much trouble as action. And I'd rather be proactive, talk to them about what's going on in their world, help them understand how they pay their taxes, and work with their other tax advisors.
The next question, can we get the documents that were discussed on the webinar?
Brendan, if that's up to you, I will provide them to you, and if NAIFA feels like they want to provide those to the folks on the call, hey, I'm good with that.
NAIFA would be happy to forward those documents to everyone on the call. Thanks, Keith.
All right, then I will get those to you today.
Excellent.
I would say,
just
one second, Brendan, relative to these documents, because we did have the compliance question, you do need to send that to your own compliance department for approval.
Thanks, Keith. The next question, what is a Monte Carlo simulation?
Okay, it's Monte Carlo simulations are named after the casino in Monte Carlo. They're used in a lot of different things in forecasting what can possibly happen based upon potential outcomes. They call those, when we use them for investments, they call them draws. You can have anywhere from 200 in our software up to 1,000 different potential outcomes, and it simulates for the clients probability of success for a particular strategy or portfolio. It's a mathematical simulation.
Excellent. The next question is, do you have any difficulty getting the tax documents from your clients to review?
Really good question. Quite frankly, if we don't get the documents, I question myself, do I really have a financial planning or wealth management client? If they're not going to share the documents with us, then we really can't help them. So we subtly demand the documents, and we have to have them, and can't think of a time in the recent past where a client said that we couldn't have the documents. We just assume that we're going to get them and take that attitude.
The next question, earlier in the presentation, Keith, you mentioned churning as a potential issue for review. Could you describe that in more detail, the effects of it, and what you would do if you recognize that as an advisor?
I'm sorry, to mention what?
Churning was the term.
Oh, churning, yes. If you look at that Schedule D and it's multiple pages long, there may be a very good reason for that. And the client may say, I'm a day trader, or they may not know at all that all of those trades are being made. So we're not going to go and accuse anybody of anything. So the first thing is a follow-up question. Mr. and Mrs. Client, I see that you have multiple trades in your account each year. Can you explain to me why you have all of those trades? Do you have a strategy of continual trading? And the answer is going to be yes. We trade a lot. I like to trade a lot. I like to play the market. Or I have no idea what you're talking about. So those would be the two extremes, along with probably anything in the middle, and you react to the client's answering of your question and follow-up. But churning is basically in accounts where there's trades made, stocks and things bought and sold regularly in order to create commissions.
The next question is, first of all, a thank you for the great info on the tax documents, and a question for you, Keith, as to whether you provide any more detailed training sessions on an ongoing basis.
You know, that's a good question. I've been asked that before. With running my practice, keeps me pretty busy. I don't know if I want to be in the education business necessarily. I do this presentation. I have done it at some state meetings, NAFA meetings, and have done extended sessions at company meetings that last for about 3 hours, where we actually drill down and do a lot more with this particular, just reviewing the documents and the whole planning annual planning routine. So yes, I do that. I don't have any webinars or anything like that scheduled, but I have done that at company meetings and also some NAFA meetings, Brendan.
Thank you. The next question, have you considered doing any review other than at year end? Yes.
We do it at year's end because it worked so well in 2005. I think you can do it anytime. What's happening is, in my personal practice, what I've done is limited my clients to what we call our top 50 clients. So I'm visiting with them usually 2 or 3 times a year, so face-to-face meetings. So we're doing reviews more than once a year for those top clients. The other thing that we're thinking about doing beginning next year is to have breakout, maybe certainly, when you start labeling clients, but we all have to do it. You have to identify and segment your client base. But maybe for those not top 50 clients, is to do some things during the summer where it's a little slower anyway, and to do some annual reviews in the summer and get those out of the way and focus then at year's end for our real top clients, our platinum level clients. So I think you can do it any time of the year. I think if you haven't done it yet, I think the first quarter would be a good start, and then to come do it at year's end again. There's really no time to do this. That's why I call it annual review instead of just year-end review. Good question.
How difficult is it to get clients to come to your office?
Well, for year's end, we get most of our meetings are here. It is not difficult to get them to come here, and we make it very comfortable for them. The meetings last about 30 minutes, and quite frankly, you just can't run around all around town trying to see all of these clients in a very short period of time. Now we do have clusters of clients in businesses, and what we'll do is we will go to that business, and the arrangement we have with senior management is that they give us an office or conference room for the day, and we will meet all of our clients actually at their work site in one of their meeting rooms or offices. So we do that as well. And so if we have a cluster of 8, 10, 12, 15 clients, we'll go out to them. But all the onesies, most of those we're doing here in the office, and it's not difficult if you ask them to do it. They need to do it. They need to come to our office. Good question.
At this time, there are no further questions, so it looks like we'll be able to close the session a little bit early today and give our attendees an opportunity to move on with working with their clients and get out a little bit early. I want to thank you, Keith. I understand that today's presentation was originally delivered by you to the MDRT in Philadelphia. So I want to thank you for reprising your presentation for us today for our NAIFA members.
You're very welcome.
For providing us with this valuable information. Also want to thank all those who participated in today's program and want to let you know that to access today's presentation and other webinar archive resources, please go to www.naifa.org/webinars. All of today's attendees will be receiving an email with the promised attached documents, and also this presentation is also available as a NAIFA program in a box, and that's at www.naifa.org. If you scroll down to the bottom of our homepage and click on the marketplace, that'll take you right there to the online store where you can request for free from the Programs in a Box section this very PIB program. This is Brendan Burnett for NAIFA. Have a great day.